In the energy quadrant, WTI futures, that's the February WTI futures, completed an inside range day lower today after 3 consecutive days of higher prices. Now, inside range days are often seen as reversal patterns, but mostly in the case when an inside range bar follows 3 strong up sessions, just like we recently had. And it often signals a pullback to support levels that many market participants expect to hold. Now, there's no guarantee that these levels will hold, but this is something to watch over the next couple of days. The high today, 79.09, back above 79 again. That was up about 1/3 of 1%. The low, however, 77.41, was down 1.79%. A little bit of time left in the session. Crude oil is still down almost 1.25%. There's an interesting swatch of German demand coming in. Germany's electricity generation from oil surged to the highest level since 2017. That gas-fired output soared as well to the highest in 2 years, as European power utility companies experience a slump in wind energy. Germany, however, is still full speed ahead with their green agenda, despite surging oil and gas demand that's happening right now. We also want to look at the currency effects of not the dollar, but the euro. The inverse correlation between the euro and crude oil has been a factor in the very short term. Over the last 30 days, the correlation between the euro currency and crude oil has been -88. In other words, they move opposite each other 88% of the time. Typically, commodities have an inverse correlation to the dollar, not to the currency that the dollar is traded most against in the open market, which is the euro. And as you might expect, if you got 180 days, the correlation between crude oil and the euro currency is a +3. But we've had some weakness in the euro currency, except for today. Today, the euro is stronger, so that may have been part of the reason that crude oil finished lower.